All right. Thanks everyone for joining us this afternoon, evening, morning, wherever you might be. We're going to bring it home. 5th out of 5 Bitcoins for Corporations session at MicroStrategy World. Thank you all for attending and listening, and also for the active chat participants. I've had a chance to just read along, and you are a hilarious bunch and an engaged bunch. So thanks for that. So we started off with Bitcoin macro strategy, which was really sort of the why corporations should consider investing in Bitcoin. Then we had the corporate strategy, which is the how. What are the different ways you might want to invest in Bitcoin? Then we went through the playbook, which is the what, sort of the step-by-step. And then we had the legal considerations. And now we're going to talk about finance considerations. And I have with me here 2 partners from Deloitte, Rob Massey and Amy Park. Maybe we'll start with some brief introductions. Amy, do you want to introduce yourself, your role at Deloitte, and tell us about your illustrious history and obsession with Bitcoin?
Thanks, Fong. Hi, I'm Amy Park. I'm a partner in our national office accounting group. I focus on all things accounting related. I specialize in some topics outside of digital assets, but spend a lot of time focusing on digital asset accounting. So my Bitcoin, I say, interest and journey started about 5 years ago while I was at the FASB. So the FASB is the Financial Accounting Standards Board, and I was doing a practice fellowship there. They are the governing body that prescribes the accounting rules in the U.S. And I was working on researching for their agenda requests that they received related to accounting for cryptocurrencies, things like Bitcoin, like what we're going to talk about today. So unfortunately, my time at the FASB was not long enough to complete that extensive pre-agenda research that they do, but that wasn't the end for my digital asset journey. So when I returned back to the firm at Deloitte, I quickly got engaged into our blockchain and crypto space, and I've been serving clients in both an audit and an advisory capacity. And I spend a lot of time focusing on the accounting issues. I also, Fong, as you know, serve on the AICPA Digital Assets Working Group. So that's a task force that hopefully I'll talk about a little bit more later, that talks through some of the accounting challenges and just how to account for some of the transactions in the digital asset space. But happy to be here and looking forward to our conversation today.
Awesome. So if anyone likes or dislikes the current accounting standards as it relates to cryptocurrency, they can reach out to you. Is that right? You're the one responsible?
Well, I'm the one who is responsible for starting the research, and then I'll share a little bit later, hopefully, about where they're at in their process.
Awesome. Okay. Rob, tell us about yourself.
Thanks for having us, Fong. Rob Massey. I'm based just outside of San Francisco. I'm in my 9th year serving across blockchain digital assets, including Bitcoin, which is a little bit awkward to be a CPA practicing dedicated to a space that there's almost no rules on point. That's a little awkward given the volume. But so what do? We work a lot by analogy to some really old case law. We have a lot of conversation with regulators, but what I look after is our tax practice as it relates to blockchain digital assets, crossing competencies and borders. And by serving a high volume of clients and seeing similar transaction types orchestrated differently, a little bit of difference in facts here and there, in the absence of rules, you begin to get comfortable on what the answer should be. What are the norms, if we call it? So we end up, just digging in across competencies and serving across people who want to lean in and invest in Bitcoin, use digital assets in their trader business, invest through different vehicles, and develop unique products associated with digital assets. So I end up collaborating across a lot of my favorite partners. Amy and I spend a whole lot of time together and have some good time with it, and others across audit and controls in our consulting practice. So thanks for having us.
Oh, thanks for being here. So you're both very modest. I do think we have 2 of the foremost luminaries when it comes to Bitcoin and accounting and tax. So we'll jump right into this. I'm sure you have a lot to share. Let's start big picture. Before we get into the financial point of view, you practice in this space a lot, especially with large corporations. What has changed in the last 12 to 18 months? Overall environment for Bitcoin and its role with corporations?
Maybe I'll start and then Rob, you can chime in. So we've seen a pretty big uptick in terms of interest, not only in Bitcoin, but in digital assets in general. So I think particularly as other forms of investment may not be viewed as kind of giving people the returns that they want to expect. And if you look at the price of Bitcoin recently and how it's pretty much soared, I think people are now getting more comfortable with actually holding it. So several years ago, I think a lot of companies were very hesitant to hold it. You're now seeing a lot more, mainstream players, like you mentioned before in some of your earlier sessions, Fong, about companies that are getting comfortable holding it. I think also, in addition to just holding Bitcoin, companies are looking beyond holding it as a form of investment, which I know is what you and MicroStrategy and your company is doing, but they're also looking at it as a form of payment from their customers. So we see that, or using it in their businesses. We see a lot of companies who are also interested just in the underlying, like the blockchain technology. So how does that technology get used, and what are the different use cases that they can use within their businesses? We're also seeing funds who are starting to hold more, and in terms of digital assets, and giving the everyday investor the ability to invest through their funds and invest in these digital assets. And I think clearly by your registration numbers for this conference, there's obviously a big interest and big focus on just learning more about digital assets in general. So I think that's a couple of things that we've been seeing. I don't know, Rob, if you wanted to add a few things on what you've been seeing as well.
Yeah, I mean, it's interesting. We've seen Bitcoin on balance sheets for almost a decade now, but you didn't know it was there because it was small, right?
Yeah.
It was retailers that were taking it. They'd hold a little, but not much. They'd convert, real time to fiat and leave it there. So the accounting questions have been around, the tax questions have been around, but it didn't matter as much to public companies because it was immaterial. Now it's really there, right? It's in a big way. It's showing up in public financial statements. These are material transactions, they're material investments. It causes people to dig in. So I think it's the brand names engaging those who are investing, the corporates investing, but also, we've seen funds invest in the space for a long time, new entrant kind of funds. Now it's the brand name funds that are looking to engage, some level of exposure to digital assets because people are asking about it. And Bitcoin does bring a unique value proposition among others. And it's a different type of asset when you look at accounting and tax considerations. So I'd say last 12 to 18 months, it's the same, just bigger, more bold, brand names bringing it into mainstream.
Yeah, Rob, and at least like when I was at the FASB and we were doing some of the outreach as part of our pre-agenda research, at the time it was about 5 years ago. So, quite a bit of a time ago. Most people that we were talking to were saying, one, if they were holding it, they didn't necessarily want you to know. And that certainly changed. And two, if they were holding it, they were very hesitant to hold a large amount. And so it wasn't material and you weren't seeing it in disclosures and, investor reporting, et cetera. So that's definitely something that's changed over the last several years.
Yeah, so it sounds like the wave is really starting to move in the corporate direction, which is great. And so you put out a recent white paper that we also have on our website on the Bitcoin for Corporations page. On Bitcoin for corporations, and thanks for doing that. I thought it was very thorough and well written. Tell us, as you went through that research process and writing the paper, what were some of the surprises that came out of it?
Yeah, I mean, I can kick this one off. You try and push something out that's relevant to a lot of people, and imagine the questions you get, and what is striking is that the points of view about why to engage with digital assets and Bitcoin and the value propositions therein, they have such great range and in why you would engage and levels of risk. And the nice thing is that, it's tailorable to a lot of people. You could choose to engage a little bit or a lot, different levels of risk in the business or outside the business. And all of those have unique tax, accounting, regulatory controls considerations. And so it's hard to boil something down into a few pages, but know that, and I know you even referenced, Fong, sort of a playbook about how to approach something like you did, which is appropriate. But boy, that playbook changes drastically when you think about how it's used in the trader business, where it's used in the business, levels of exposure, and how that tone is set differently by management, board, and how it can change on a moment's notice. So that was the big takeaway, just the range. How do you push something out that's succinct but applies to a broad range of folks?
Got it. What about you, Amy?
Well, and for me, maybe it plays a little bit on, Rob, what you were saying, and also Fong, I think you had mentioned earlier in one of your earlier sessions, the aha for me was just the amount of collaboration that's necessary. So, working with MicroStrategy, all the calls we had with all the different folks within the organization and outside the organization, it's like almost a cultural mind shift or a change, and you need to really get everybody on board. And it's not like you can just go invest in Bitcoin and like a silo can just go and invest in it. You really need to work together within the different, parts of within your organization. So, legal, finance, ops, risk, internal audit committee. I mean, the list goes on, but then also with the right advisors, right? To Rob's point, we try to provide a playbook, but everything is also always comes down to facts and circumstances. And for every company, it's going to be slightly different, or you may decide to do things differently. So making sure you have the right advisors and the right type of advisors who have, that expertise. And so I think the collaborative nature of it is something that's unique, and making sure that everybody is on board and everyone's educated, like they understand what we're doing. And I mean, I think, the folks in the organization who don't usually deal with accounting, I think within MicroStrategy, they all know accounting now. They can talk accounting too. They could sit here and you don't really need me, but just making sure that everyone's, knowledgeable and educated. And that collaborative aspect, I think, was for me, a big takeaway, not only from our experience with you, but just as we were thinking about, what is it that we really want to tell folks who are interested in this, and realizing that they can't just go out and do it, in a silo.
Yeah, just to add to that. Sorry, go ahead, Rob.
I mean, I need to say, we've been talking about collaboration a lot, but Fong, you set a higher bar. We would get on these calls, but there were like 30 different people, both within MicroStrategy and other advisors and crossing competencies, but you set an incredible tone of collaboration. Like, you all need to listen and lean in and engage to understand the dependencies that exist between all these different competencies, because all the norms of what you did in the past, those are all gone. This is new. And I think you in particular, Fong, you set a great tone of collaboration and engagement. That was what you expected, and you got it.
Yeah.
That's very kind of you, Rob. I think there's also, I call it sort of the Bitcoin community, the Bitcoin ethos. It's almost like there's a once you show everybody your Bitcoin tattoo, and you're part of a group of people who are like-minded, who have similar, very positive beliefs around technology and the ability of technology to solve problems. And we as a software company absolutely believe that. But once you get into that group, everyone is working towards the same objective, and everyone knows there's a greater good to what you're working on. You heard that from Ross, you heard it from Mike, you see it from the people who participated in the chat here. Like, there is something that everyone believes in together. And I think that does drive that collaboration. So one of the interesting things I saw you write about in your paper is, when you start thinking about treasury, corporate treasury in general, right? The historically, people think of the role of treasury is, in some cases, a risk management role and preservation of capital, right? Really minimizing risk and making sure that the money is available for corporate use and purposes. And of course, for a long period of time, the safest way to hold your capital in a low risk manner would be either a T-bill or just US dollars. And I think what you heard, especially from Ross, make a pretty strong argument for is that is just no longer the case. It isn't the safest place to hold your capital. What are your thoughts on that? I mean, that's a pretty provocative point of view. It's one that we've taken, and we think 2020 really changed it. But what are your, you've been in the space for a while. What do you think about that, and are corporations waking up to that aha moment?
Yeah. I mean, I'm the last qualified person to say what's right or wrong, but I'll tell you, it's an increasing conversation, and it is becoming the norm, and it's coming in through the board, or treasury or management or a shareholder group or something, like somebody is raising the question. And so what's good is that it's now become a conversation, and there are frameworks and there are structures. And what is most important, I think, is to be ready for the conversation, because it's not a light topic. And if there's a chance that this is somewhere on your radar for discussion, you need to be armed with what it is, what are the considerations, at least at a high level. And if there's a chance that you will engage, allow the runway to do it thoughtfully, because there's a lot of challenges and pitfalls along the way. So I think there's be ready for the conversation. And if there's a chance that the conversation is going to land in execution, then be just readiness. What does that look like for you? Who's the team? Do you have the right folks engaged at the right level of education to absorb this massive shift in what Treasury and those decisions might look like, particularly if you're a public company? So it's a real conversation. I think readiness is critical.
Okay. I think also being informed, make it your own decision, not because someone else is doing it, and understand the risks and the benefits. And, I think that's with any type of treasury management function where you're managing, you're balancing what are the risks that you want to take versus the benefits that you think you're going to receive. So be informed about that decision making. And I think, Fong, you mentioned that earlier today about just, read up on it and understand what we're talking about. And so being informed, I think, is really important.
Okay, so you guys are going to punt on that question because you can't directly advocate for Bitcoin. Is that what's going on?
But it's a thing, it's real, and there are really educated people who are qualified to make that choice, saying you should study it. And so I think everybody should have your own opinion so that you can facilitate a conversation between the board and management and shareholders.
Okay, I get it. I saw you wink when you said that, so I'll consider that good enough. All right, so I won't bug you about that anymore. Let's move on the next set of questions. So, all right, someone decides, hey, I want to invest in Bitcoin. Rob, maybe walk through just how can a corporation do it? A publicly traded company, what are the different paths or avenues to do so?
Yeah, so you could choose to engage directly, and that is to be the direct owner, whether that's self-custody or outsourced custody, which has sort of one, that's one mindset. You also might go in with a group, either a dedicated fund, or you could come in through something that's ETF-like and gain exposure through one of those vehicles. Or you might engage because you're buying, equity in a company with a large position, like somebody on the phone, or others that are engaged either investing in a large position or mining companies. There are those mining companies out there that you can invest in, and there's direct access, and they might also HODL as well. So all of those have different considerations for accounting, tax controls. There's levels of transparency. There's levels of risk. There's how much are you doing yourself versus letting other people do it. If you do choose to go an indirect path, then you're a little bit subject to the decisions of others. So in any of those, and that becomes when you're outsourcing something or going in through a fund or owning shares in somebody else, make sure that your risk profile and your level of thought as to what should be done and for the right reasons aligns with the other side, and that which is the party that's taking care of your investment. There's a lot of different paths, and so I think it's just digging in and getting behind the curtain to make sure you get it and you know what your investment represents. Okay. If you don't hold it directly, yeah.
So great. Let's go down two of those paths and talk about the accounting associated with it. And one path being directly purchasing and owning Bitcoin, and the second path being investing a fund, a Bitcoin fund. Maybe Amy, you can walk us through high level. What does the accounting look like in one versus the other?
Yeah, sure. So let's start with the direct investment first. And I'm going to focus predominantly just on the accounting in the US. Just know that the accounting overseas internationally is slightly different. So if you hold an investment in a company, for example, like if I were to own MicroStrategy stock, generally I'm accounting for that investment at what we call fair value. And fair value is a value that I think that I could go sell that to somebody else, like a willing buyer in the marketplace. And since the MicroStrategy stock is listed on the NASDAQ, it's pretty easy for me to go Google it and look it up and look at the stock price. And as that price goes up, I get to mark my investment up. As the stock price goes down, I mark my investment down. Now, with a digital asset like Bitcoin, although a lot of people feel like economically it's very similar to like an investment, I'm investing, another form of investment, the accounting there is very different. So under US accounting rules, we treat it as an intangible asset. Now, Fong, you may say like, what? And Bitcoin as an intangible asset? Aren't intangible assets things like licenses, patents, like a customer relationship list? Like, how does Bitcoin?
I think I might have said that exact thing. So.
I know, and I've had that conversation with I don't know how many folks. Yes, so the accounting rules are different than maybe sometimes how you would think that things should be defined. So the accounting definition of cash doesn't meet, or Bitcoin doesn't meet the definition or the accounting definition of cash. It wouldn't meet the definition for a financial instrument. It doesn't meet the definition of inventory. And so by default, because of its not tangible nature, its digital nature, it's kind of just left in this, I'd say, residual of it's an intangible asset. Now, what does that mean for accounting? That means when you're going to account for it at the cost that you paid, subject to impairment. So impairment, if you think that it's no longer worth what you paid, what you originally paid for it. So that basically means as the price goes down, you're going to write down your asset. But as the price goes up or recovers, sorry, you don't get to do anything. And with with a digital asset like Bitcoin, where you have such huge market volatility, a lot of people really, really struggle with that accounting answer. And it's particularly challenging. So for example, if a company bought Bitcoin back in like 2017, I think that was when it first started hitting the $1,000 price range, which 2017, it's not that long ago, right? So if I had bought Bitcoin back then, I would account for it at $1,000. And assuming the price probably went down at some point, but let's just assume it didn't go down at all, it just went up. And in reality today, I think the last time I looked at it was just over $37,000. It may be worth $37,000 because I can go sell it to Rob today for $37,000, but on my accounting books and records, it's still reflected as $1,000. And that's the trouble with this accounting model. And I'll talk a little bit more later about, hopefully about how, what you can do with that accounting model, but, that's if you actually hold it as an investment. Now, your other path, what you described was if you're holding it directly in a fund. Now, accounting has specific industry rules for certain industries, and funds, they happen to fall within that. So funds get to apply specialized industry guidance, which basically allows funds to account for their assets at fair value. Now, just because an asset is in a fund, it's not as easy as it's always at fair value. You have to make sure it meets the accounting requirements to be, considered a fund. I won't go into too much detail on that. So, but generally, if you're investing in a fund, you're no longer investing in Bitcoin. You're now investing in a portfolio, probably, of, a pool of assets. And so that changes the nature of your investment. Your investment is no longer not tangible. It's actually tangible because you have, a share of this, or share or a unit or whatever of the fund. And that allows you to account for that fund slightly differently than if you were to account for it as a direct investment.
So if I get accounting benefits of mark-to-market, if I was to invest via a fund, why would I ever choose to then just buy and hold directly? What are the pros of buying and holding directly? And that may be as much an accounting question as it is a general question that folks might want to consider.
Yeah, and I think that goes, and maybe it was Rob that said before, when you start using other forms or vehicles of investment, you lose control. So when you hold Bitcoin, you can say, I want to self-custody it, or I want to custody it there, or I want to buy it at this exchange. I want to buy it at that exchange. I want to sell it to this person, like this, OTC market. I want to sell it at this price. You make all those decisions when you own the investment. When you are putting it into a fund, it's in a fund. Someone else, a fund manager, is probably making those decisions. Sometimes funds will prescribe, what kind of assets they have, but usually the investment advisor or the fund manager is the one who has the discretion to say, you know what, now I think we're going to expand our portfolio. I think Bitcoin's not it. I'm going to go to the next digital asset, or forget digital assets. I'm going to go back to like oil, or, you lose kind of that control of how you make your decisions and where your assets are held, which is actually in this space pretty important when we talk a little bit about controls and understanding, the non-tangible and the digital nature of digital assets. That's really important for some folks.
Yeah, it becomes a meaningful decision because of these dependencies, right? And these are new things. How do you feel really like they've nailed security? How do you feel like they're executing on the strategy economically, but also considering the tax ramifications? They've got the right methods in place. That's the stuff I think about. And going back to Amy's fair value accounting, if you hold it directly, not to add insult to injury, Fong, but if you do, right, anybody who impairs, usually, you book a deferred, right, book a deferred tax asset, but we didn't have a realization event for tax, right? If you've just marked it down. But if you're holding it, it's a source of, capital loss. If you were to sell it and you don't have a source of capital gains to offset, we need to evaluate whether or not you need a valuation allowance to actually to book that deferred. So it even makes the impact even worse. So some considerations there that go pretty deep, but just to flag it.
Yeah, and I guess the other piece is when you impair the intangible asset, and I guess it has to be assessed for impairment every quarter, right, based on low price of Bitcoin or whatever that asset is in that particular time frame, then that impairment ends up going through the income statement, right, Amy?
Yeah, it does.
Yeah, so it's funny, like when I think about Bitcoin, and I know a lot of the folks who are listening are part of this, believe in life, liberty, and Bitcoin. and what that, when you think about that, what does that mean? It means that I want to own my Bitcoin. I don't want someone else to own it. And I want to hold my Bitcoin. I don't want to sell it. And it seems like the accounting is set up against both of those things. Because if you wanted the better accounting, you wouldn't own the Bitcoin, you just invest in a fund. If you wanted the better accounting, you would buy Bitcoin when it appreciates, you would sell it so you can recognize and realize the gain. So it's not great. Amy, what are you going to do to fix this for us? I don't mean it that way. I mean, so you were at the FASB, you're on this AICPA working group. What do you think is going to happen next?
Well, so unfortunately, the AICPA and the working group, we've done a lot of great work. There's a practice aid that goes through a lot of both, not only the accounting, but also the auditing issues. And I'd say that practice aid is not only for auditors, it's for people who will be audited. So you know what your auditors are thinking about. But the practice aid and the working group are really focused on how do we think about these transactions in light of today's guidance? The AICPA and certainly the task force doesn't have the jurisdiction to set the accounting rules. That's all with the FASB. That's been given to them by the SEC. So absent the FASB coming up with, changing standard setting, I think this is the model that we'll ultimately be in. Now, I mentioned I started that research agenda, the research on the pre-agenda project. Sorry, that was a mouthful. When I was at the FASB, when I left the FASB, that was still underway in terms of, the FASB doing research and outreach. Just last fall, they did have a public board meeting that talked about that agenda request. And at that board meeting, the board voted 7-0, so unanimously, to decide not to add a project. So I don't think that bodes well for any change anytime soon. Usually, I'd say standard setting, is a long process. And if they decided not to add a project back then, that's not to say they may not. They did say that they were going to monitor and, see how the industry changes and companies' use and prevalence of digital assets changes. So there could always be a project in the future, but it'll be up to the FASB to decide whether to add that project or not. And I will say, Fong, a lot of people who I talk to say, you're absolutely crazy. That cannot be the right accounting. But at that board meeting, you know, the board members talked and they pretty much reaffirmed that intangible asset model that practice has been kind of going to. So I'm not crazy. I'm just trying to figure out how to account for these within existing GAAP. And so I think we're stuck with this model for now.
Okay, you know, I think the model is what it is. You know, interestingly, you know, the whole idea behind accounting standards is to create transparency for all the stakeholders who invest in a publicly traded company, right? And in that case, many of the stakeholders are shareholders. Do you think folks understand that accounting and are starting to look through it and, you know, think of non-GAAP valuations and market valuations as opposed to book valuations, if you will? Like, are the investors getting pretty smart about the accounting and how they might want to look at it differently, if you will?
Well, so I'd say it's difficult to know what an investor thinks. But I think what's fair to say is that companies like MicroStrategy, you're in the driver's seat. You have control over the information you provide to your investors. And so while the accounting results may, you know, cause the asset to be recorded as an intangible, a company can provide the right level of disclosures that they feel is meaningful to their investors, not only in your financial statements, but in your investor presentations, et cetera, on your website. That explain kind of how the accounting. So what was the cost basis? What impairment did I record this past period? What's my life to date impairment? Where is that impairment recorded? If you wanted to back that impairment out, you know, not to say that the investor will or will not, but if the investor wanted to, they have that information. You could even talk about like, and I think Fong MicroStrategy did this in their third quarter 10Q when they first started their investment, but what's the value of one Bitcoin on an exchange and how many Bitcoins do I have? So, you know, if you really wanted to, you could figure out the value that, you know, our Bitcoin is compared to what we have recorded on our balance sheet. So I think disclosures are going to be important, and we'll see what investors, you know, how investors interpret that. You know, whenever I talk about accounting, people don't get it. I have to say it like 5 times and they still don't get it. So will investors understand the accounting? I'm not sure, but the thing that you can do as a company is provide as much information that you think is appropriate or that you think is meaningful and how you view your business and how you view your investment, and let them decide.
Yeah, that makes sense. And I do think investors generally are pretty sophisticated, right? Yeah. And are pretty sharp. And I think people are starting to understand the accounting standards, and they also understand the Bitcoin valuation as it exists in the market. There's a lot of places you can go get that view on valuation today.
Right.
And so, you know, hopefully at some point the accounting standards do change. But I think until then, I think you're right, Amy. I think people are fairly smart and sophisticated, and it shouldn't be something that ultimately deters somebody from trying to do what's right for their treasury. You know, versus sort of where the standards sit today. More broadly, Rob, you know, what is your view on the incoming administration? And, you know, maybe they're not going to take, you know, maybe they won't have the FASB take up, you know, the current accounting standards for digital assets like this year, right? Like Amy's been working on it for 5 years and then multiple years at Deloitte. I know things don't move that quickly, but there has been a lot out there about the incoming administration. And for example, Gary Gensler and the fact that he taught, you know, classes on, you know, blockchain and Bitcoin when he was a professor at MIT. And, you know, there's Cynthia Loomis is out there, you know, really a proponent as a Wyoming senator. What are your current, just big picture, what are you seeing out there?
Yeah, this is crystal ball time, right? Okay, so we have, don't forget, you know, Brummer with CFTC, a lot of exposure to the space, as well as Barr. with the OCC. And so what I would say is they're bringing in a level of experience in the space. They're not asking for a blockchain or a Bitcoin 101 course. They've been around. They're showing up with their own points of view. They're showing up informed as to what they think. They understand, I think, the ecosystem. They understand the industry. So I'm heartened by the fact that when they do speak or they make a decision, they're doing so with their own sort of experience built in versus learning it for the first time or relying on others who might be showing up to advocate for their positions. So I think that we can think what we want about their views, but they're doing so from a better starting point versus just picking it up now. And because the industry's shifted a lot, it continues to move, but it didn't start last week. And a lot of them have multiple years. They've seen stuff go well. They've seen stuff go poorly. They have direct interactions with some of the players, and so I think it's good. I'm hopeful that we're going to see some real thoughtful tone and real collaboration among the different groups. So I'm optimistic that we're going to see something thoughtful. I can't tell you when, but I like that they're coming from a place of experience.
Look, an administration that brings in thoughtfulness, experience, and is willing to do the work, I think it's great. So that's a good starting point. Amy, what does your crystal ball say?
Well, I was going to just maybe add on to what you were maybe starting off with and how the linkage between the accounting. So the SEC is not going, like, they don't have the authority to add projects onto the FASB's agenda. So that's all with the FASB. The SEC gives the FASB the authority to create the accounting rules for the US and for public companies particularly, but they can't, go tell the FASB, hey, you need to add a project on digital assets. What I will say though, is that the SEC is always open to talking about accounting. And so as, public companies always have the ability to, do what they call pre-clearance or consultations with the Office of the Chief Accountant at the SEC to talk through some of the challenging accounting interpretations of current GAAP. Now they'll just say whether they object or not object to a company's, accounting view. And usually that accounting analysis follows, current GAAP rules. It doesn't say this is the GAAP rules, but I just want to completely ignore it. Are you okay with it? But they are open to that. And, I think we're seeing a lot more public companies are entering into transactions in the digital asset space where it's not really clear how to apply the GAAP. We are seeing more companies go to the SEC to pre-clear and consult on some of their accounting conclusions. Now, that's not adding a project and changing GAAP, but it's how a company is interpreting and reaching an accounting conclusion related to their specific facts and circumstances. My crystal ball is black, so I don't have anything else to say about that.
Right.
But did want to clarify the ability for companies to do the consultations with the SEC, and they are always open and willing to talk to registrants.
Okay, great, thanks, Rob. There's a lot to think about from a tax perspective. Give us just a general landscape. What are the key considerations companies who are investing in Bitcoin should be thinking about, especially if your strategy is to invest directly into custody? Talk to us about wallets and why a company needs to segregate, et cetera. So just give us a general landscape. I know you could talk about this for days, and it can get very fascinating. But you can go a little long, but try to keep it at a level that people will understand.
Yeah, we spent a bit of time on this topic, and one of my favorite words, is segregation, and that is not a political statement I'm making, and that is rather that. Sorry. You need just 50. You have a 15-second delay on me, right? So that's good. The point is that Bitcoin, among other digital assets, are mostly fungible, unless you go into some extreme circumstances to sort of create proprietary wallets. So what you do is you segregate tranches such that you have the ability to track basis and lot relief as you wish. So if you were an OG and you had a bunch of $300 basis Bitcoin, and then later on you increased it 1,000, and then you kept on going over time, and 10,000 and 30, and then even up to 40, you would like those tranches to be segregated into different wallets or addresses so that you can choose if I'm going to sell some for, if I'm going to, diversify, if I'm going to shift something around, I want to match what the current price is probably to the tranche that I have it at to minimize my gain, right? If you don't appropriately segregate your digital assets, then it's believed to be very difficult to use specific identification. So you would be instead bound by FIFO, first in, first out, which is not super helpful in a bull market. So we talk a lot about wallet structures. We've spoken about that, and we coach others. That means different things to different people, and it may be different times that you invest, different tranches like that. It may be a band of or a range of values, etc. Character is another thing that we think about a lot. If you're investing, then that's probably going to be a capital asset in nature. If it's used in your trade or business, then that could be it could be ordinary trade or business property, and that gets to other methods you might employ. It gets to sourcing. It gets to other things. And so we talk about character. Entering or exiting a fund or a corporation using Bitcoin as an investment, a little different than using fiat currencies. And so it's really important to make sure that your general rules, your general thoughts around non-recognition events and contributions or distributions, that's different. It doesn't always work the same. And so we're not dealing with traditional commodity securities and fiat here. And so you look at the rules to apply, how do the characteristics of that digital asset work with those rules, and then you figure it out. And then it's really the products. Now we're seeing financial instruments, financial products being developed, loans, DeFi. And so, while the economics may be similar to other instruments with other types of assets, because it's a digital asset, we again look to what it is, how do the rules apply, and then, get back to recognition, sourcing, basis tracking, and all the rest. So there's just sort of a high level overview of some of the things we think about.
If you want to talk about loans and digital asset loans and the accounting for digital asset loans, you think the intangible asset is bad, this accounting is bad.
Okay. We'll spare the audience from that accounting.
Come talk to me if you're interested.
That'll be the next course, the next video, if you will. Rob, two other things on the tax side. When someone wants to move their Bitcoin that they have in custody from one custodian to another, what are the tax impacts of that?
Yeah, if it's yours and you're just moving it between custodians, that should be a non-recognition event. Know that the optics are important though, because these are if it's an on-chain transaction, then that is transparent to you, to the regulators, to everybody. And so the default presumption may be that it moved because of a transaction, not just because of where you held it. So this is where you want to have intentionality behind the documentation. So no, I just moved it. It now sits over here.
Got it. Well, and that's nice. So what about investing in Bitcoin or holding your Bitcoin onshore versus offshore funds, right? And tell us about sort of, for companies that may have, cash or fiat currencies that are offshore and they wanted to invest in Bitcoin without repatriating, or should they repatriate? Just talk to us a little bit about that.
Yeah, no, it's a good question, and it really depends on the lens you're applying from where you're coming from. So U.S. investors now, if you're a corporate, then it sort of doesn't matter now because everything's taxed in the U.S. on a real-time basis. There's not real motivation to do that. But if you are moving it because you need to deploy capital into a non-U.S. subsidiary just because they need something there for ratios or other regulatory requirements, know that digital assets don't cross borders as gracefully as fiat currencies. So you got to watch for what that transaction looks like. You also have to look for perhaps withholding tax obligations, how that fits into the treaty network and the two different jurisdictions we're discussing. Others may be sensitive, other, non-US, as an example, holding, digital assets here in the US, then, different considerations there, effectively connected income, basically. And so people rethink when you're using digital assets for different reasons, let's play the risk game and how it could be conceived, and do you need to structure around it?
Okay, awesome. So things to think about there. All right, this is great. Thank you so much. Maybe we can close with both of you. Last words of advice. Someone is in this call or is watching this video and saying, "Hey, look, I'm ready to do this. I want to invest in Bitcoin. There are a lot of reasons why I want to do it." What advice would you give someone before they sort of jump in, or as they're starting to plan the process?
Amy?
Yeah, thanks, Rob. I'll start. So we talked a lot about accounting and tax in our session today. We didn't really have that much time to talk about internal controls. And when you're investing, you nod your head, Fong, because when you can't have a conversation about investing in Bitcoin or make that decision without talking about internal controls. It is super important in this space and really challenging sometimes given the nature of the asset. And not only are we talking about the controls like within the four walls of your organization, so things that you have control over, but now we're also talking about potentially controls outside of your organization. So I think, for example, most companies, we're not seeing a lot of companies choose to self-custody. They're usually, looking for a custodian. And so understanding the controls that are in place at that custodian are really important. That's only one example. Our white paper, Fong, that you mentioned, talks a lot about, some of the considerations related to controls, but I can't be a true auditor at heart without not having a conversation about internal controls. So maybe not, my advice, but, one thing to not, to also think about is internal controls in this space.
Great, thank you. Yeah, and sorry we missed that topic, but it's a very important one, and I appreciate you reminding us about that, especially when it comes to the custodian side, for
Yep.
sure. Rob, send us off with some uplifting words.
The auditor.
Not internal controls, something more uplifting and exciting.
Well, we've spoken a lot about complexities, but this is doable, right? With the right people, with the right tone, with the right level of collaboration. Just allow some runway. You don't want to create too much anxiety in the system. Usually, whether you're talking about investing or using it in your business, you're going to iterate probably a lot, and you're going to hit some challenges you didn't anticipate. And so just allowing some runway to bring a sense of grace to do it right. I think if you apply too much time pressure to get something done, then you've created risks. It's doable, but I think that if you are very careful, allowing people to think, to absorb, get together as a group, absorb, come back, and allow some iterations, then that sense of grace is probably going to help assure stronger levels of quality. Probably it's also going to be more enjoyable for the experience. This can be fun.
Well, thank you so much, Rob. Thank you so much, Amy. I really appreciate your time. Also appreciate your partnership during the process. And for those who joined us, thank you also for your time. This concludes the Bitcoin for Corporations session for today. We do have other MicroStrategy World content that is continuing today. And if you go to the sessions, you'll see what else we have today. And then we start again tomorrow morning. And we also start our Bitcoin for Corporations segment tomorrow too, where we'll have 10 awesome vendors who will discuss the Bitcoin landscape, their experiences, and what they have to offer too. So I appreciate all your time, and have a great rest of your day.
Thanks, Fong.
Thanks, Fong.